Welcome back. You're watching us here on Editors Roundtable. We've discussed the market setup, spoken about whether Hrithik will dance or not, and also spoken about midway through the earnings season. We have Anshul with us. Anshul, will Hrithik dance or not? Nimesh did a wonderful analysis of what the triggers for HDFC, Infosys, TCS, Reliance, as well as Kotak Mahindra, along with ICICI Bank would be. Your thoughts on when and how these guys will dance?
Mangalam, that's an interesting question that we deal with also all the time. I have to tell you that between 2017 to 2020, it was Hrithik all the way. It was dancing every day, and everything else was going to dust. Small and mid caps, as we all know, in that period were really, on the floor, and it was Hrithik that was hitting the floor. Come 2021 and the rally that happened in small and mid caps and in the broader markets in general, what we saw is while earnings kept pace, but because valuations were really ahead of every other segment of the market, Hrithik stocks consolidated. And that consolidation has happened for the last 3 years, which Nimesh very interestingly and very rightly pointed out. And given that this consolidation has happened, I would say that some constituents of Hrithik are looking quite interesting at this time. And definitely, if not all of Hrithik, half of Hrithik will dance at in the next 1 to 2 years. And as we know, he's a break dancer. Half of Hrithik can dance very well as well. So, keep an eye on Hrithik.
All right. We will keep an eye out on Hrithik, but apart from that, we have another new listing next week as well. November 10th is when Honasa Consumer, the much talked about Mamaearth IPO, actually lists. It's seen good subscription, almost 8 times good subscription coming in from the institutions, HNIs, employees, as well as retail. Just about managed to oversubscribe out there. But the question is, what happens after the listing, after so much chatter around it? I would simplify it and talk about 4 important things that you have to watch out for. The first important thing, the most important thing, is growth on the top line. The company's 3-year revenues have grown at 80%. The industry has grown at 28%. That hero brand, which is Mamaearth, that is grown at 62%. The company said to us that, going forward, they would like to grow twice the industry over the next 5 to 7 years. So this is the first thing that you have to watch out for. Apart from the top line, the most important thing, the EBITDA margins. Now, gross margins, the company has margins of nearly 65 to 70 odd %, but EBITDA margins are in low single digits. Why is that? Because nearly 40% of their earnings go into, or 40% of their revenue goes into advertising. So at some point, advertising has to scale. As you can see, the correlation between EBITDA margins and ad spends coming down is extremely high. So once the company leverages that, the next few quarters, EBITDA margins is something that we will have to watch out for. The third leg of growth, online has been doing well for them, but they're also expanding their share offline. So from 81% of their revenues, which came in from online a couple of years ago, now that numbers come to 64% as the end of the first quarter. And the company said that they currently reach 120,000 stores, and their aim is to make offline expansion the next leg of growth. Remember, the FMCG universe is over 8 million stores. So even if they get to 1/10 of that, there is a big growth, tailwind out there. The question, however, is that a lot of these consumer giants are waiting in the offline stores with their products as well, and as a result of which, there would be extremely strong competition, especially for Mamaearth's hero products, which are the Upton face wash as well as the onion shampoo. For all of this, you are paying a steep value, right? Price to sales 1 year forward is 5 times, price to EBITDA 75 times, price to earnings 100 times. This is annualizing the first quarter revenues and the numbers. So if you look at any outperformance here, maybe these valuations would come into your favor. However, the other chatter is about promoters having sold close to around 107 crores worth their stake here. But that's nothing new. We've seen a lot of these new age players actually offload some of their stake in the IPO itself. Deepinder Goyal, when he sold, during Zomato IPO, sold shares worth nearly 271 crores. Vijay Shekhar Sharma sold shares worth nearly 400 crores. And the Nykaa family as well, the Sanjay Nair family's trust, did offload liquidity or get some money worth nearly 540 crores in the Nykaa IPO. So yes, promoters have been selling in the IPO and the new age companies, and in that, Varun and Ghazal Alag close to around 107 odd crores.
Okay, all right, Mangalam, thanks a lot for that. Well, we've completely run out of time on this edition of Editors Roundtable. Thanks so much for watching. That's it from myself, all the editors, and thank you, Anshul, as well, for joining in.